You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer. Hi, Victor here from foreshowmarkets.com. In today's video, I'll be introducing you to the concept of moving average crossovers and how you can use them for your analysis and trading effectively. Okay, so what exactly is a moving average crossover? In my previous video, I showed you how to use a single moving average for your trading and analysis. Okay, in this video, I'm showing you how you're going to use two moving averages. Okay, and when they cross over, you use them as a basis for your uptrend or your downtrend buy or sell signals. You can also use it as a confirmation of the cross or the confirmation of just using a single of the signal you get from just using a single moving average. Okay, so what are the basic principles of this? Okay, basic principles: one, you use two or more moving averages, but in this video we're going to be using two moving averages. Okay, one is fast and one is slow, meaning simply that one is example, if you use a 20 period moving average and a 40 period moving average. Okay, the 20 period moving average is the fast one, and the 40 period moving average is the slow one, because the 20 period moving average is calculating the average for a smaller data set, and of course it's going to move faster for little price in the market, more than the for 40 days or for 40 period moving average calculation. Okay, principle number 3: when the fast moving average moves above the slow moving average, we consider it a buy signal and it confirms an uptrend. And when the fast moving average, okay, below the slow moving average, we consider it a sell signal. Okay, so let's look at that practically on my chart, but let's look at this first of all. Okay, so you can see here you have two moving averages. The blue one reacts to price movement, so when the price goes up, you can see the red one picks up faster while the blue one picks up slower. And so that means the red one is the faster moving average. In this case, if you're using 20, and then the slow one will be the blue one will be the slower moving average. In this case, if you're using 40 period moving average. And so how do you know when a buy, an uptrend is about to start or confirm? When the first one, you can see here, it was coming down before, and then the red cross above the one. Okay, and so once you see a candle like this closing, okay, both candles above both lines, sorry, okay, and this cross, it has to cross properly. Okay, once it crosses properly, that is your buy signal. Okay, and of course you can put your stop loss below support there and put your take profit anywhere above there, and use the formula I usually use. You can do 2 times your take profit, can be 2 times of your stop loss, or 4 times of your stop loss, or 3 times of your stop loss, whatever works for you, whatever gets you the result. Okay, so that is for the buy signal. This is wrong. This is not a sell signal. This is a buy signal. So please don't follow this. Okay. Next one, for a sell signal. Okay, the fast EMA, fast moving average, closes below the slow moving average. Red is equals to fast, slow is equals to blue. Okay, so let's see. So let's look at what happened here. Now you can see, because of this crossover here, it confirmed an uptrend and a buy signal. Most times you can see it went up nicely. Okay, and so the buyers would be making will be doing well and making profit. And why does this keep going? Why does the moving average keep going up? Because the average, the previous candles are keep going higher. Okay, and as the average prices keep going higher, you see that the space between the blue and the red gets wider and wider. Okay, and then when it's trying to cross, when the trend begins to weaken, okay, or a reversal is about to happen, you see the two moving averages begin to close up towards each other. And then when it finally crosses, okay, you basically you have your indication that this trend is about to be over, or we're about to go into a sideways market. Okay, so at this point we consider this crossover here. Once the candle crosses confidently up below the moving the cross, once the candle is below the crossover, okay, once we see this cross here, like from here, maybe the price would have, okay, the price will be somewhere around here. When this cross happens, that is your sell signal, and then you can put your stop loss above the resistance there, and of course use your take profit as recommended. All right, so you can see it came back up there, but it didn't go above the resistance. So whoever took this trade here, of course, would have made some profits. Okay, and it started going down, 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 and then when the price crosses up again, you can see the confirmation for you to close that trade, or you just use your fixed take profit and fixed stop loss. You don't move it. Either your take profit gets hit or your stop loss gets hit. Okay, let's see how we can achieve that on a real chart. So I go to my indicators list, click on this, come to moving average again. This time you make it 40 period, and then you can change that color to blue. Now you see what we're talking about. So now we have a fast and we have a slow moving average, and it's pretty accurate when you are in a trending market. Once you can avoid the sideways market, it's pretty accurate. Okay, like here was a little bit of sideways market, but after the sideways market ended, you can see that it just kept going up and up. Okay, and then when it crosses over again, this is your sell signal. It came down reasonably and then crossed back up again. This is your buy signal, and it went up reasonably. Okay, crossed down again. This is your sell signal. Okay, now I also want you to note that, let's do this, you can do this on a 1 hour chart. So moving to 1 hour chart now, you can do this on a 1 minute chart. Moving to 1 hour 1 minute chart now. The lower the time frame, the more signals you will get. Take note of that. The lower the time frame, the more crossovers you will get in a short period of time. Okay, so on the 4 hour we're calculating, the red represents the average of the last 20 4-hour candles. So on the 1 minute chart, this indicator will be calculating the average of the last 21 minute candles. That means 20 minutes time. But on 4 hours, 20 minutes is about 80 hours, which is about 3 to 4 days. So you understand that the 1 minute chart will give you more signals, and the crossovers and the movements are faster than a 4-hour chart, okay, that will take longer time to move. Okay, so all depends on what type of trader you are. If you are a scalper, you're going to use the 1 minute, 5 minutes, 15 minutes. If you're a day trader, maybe use the 15 minutes, 30 minutes. Okay, if you are a swing trader, maybe you're using 30 minutes, 1 hour, 4 hour. And if you are a long-term trader, position trader, maybe you're using the daily chart and the weekly chart. Okay, so this is how your crossover looks. So I'm going back to the 4 hour. I do all my trading on the 4 hour chart because I don't want to be a scalper or a day trader. I want to be a swing trader towards position trader. Okay, so I use the 4 hour chart, and if you look at this, these crosses are giving you some really nice signals. All you have to do is go to your demo account, test, optimize, and try and your main job will be to try to eliminate the sideways market where it keeps crossing up and down, up and down, up and down in a short period, in a short time frame or a short period of time. Okay, so that's basically how you use your moving average crossovers. Anything I'm missing out? That's basically it. So combine this with, MACD, which I will show you in the next video. Combine this with MACD. You can combine it with chart patterns, head and shoulders, double tops, double bottoms. You can combine it with candlesticks patterns as well to get something that will work for you. All right. So I hope you've learned something new. In this moving average crossovers are extremely powerful. All right. You can leave me your comments section. What do you think about moving average crossovers? If you use them, how effective have they been for you? If you have any questions, simply drop the questions in the comment section and you will get a speedy response. Okay, so give us a thumbs up for this video if you like the video. If this is your first time watching any of our videos, make sure you click the subscribe button, click the bell to the right of the subscribe button, and click all notifications so you can get notified whenever I upload a new video. All right, so have a pleasurable day. I'll see you in the next training video. Cheers.